Good evening, professionals. Today we are going to discuss about acceptance of deposits under Companies Act 2013, read with Companies Acceptance of Deposit Rules 2014. My sincere thanks to Mr. Sundar for this detailed presentation. These are the legends used in today's presentation. This is the structure of today's presentation. We will first see the overview of deposits, meaning of certain relevant terms under Deposits Act read with rules, meaning of deposits in general parlance, prohibition on accepting deposits, what are the key terms and conditions, what are the charging provisions, basically section 73, 74, rule 3, rule 4, all the key provisions we will be dealing with, conditions prescribed under section 73 subsection 2, what are the exceptions to these conditions, and repayment of deposits accepted before commencement of this act? What is the status of those deposits accepted prior to 1st April 2014? And the damages for fraud, deposits from public, how it is treated under the act, punishment for contravention of the provisions of this section, other provisions under CAD rules, income tax implications, and an interesting case law. Friends, please remember, before we begin with all the charging provisions of deposits, this deposit rules and sections are like less in number but has serious ramifications. There are only 5 sections, section 73 to section 76A, dealing with companies' acceptance of deposits, and rule 1 to rule 22, including 4 forms, form DPT 1 to DPT 4. However, they have serious ramifications to protect the interest of depositors. So this is the brief overview of deposits. Companies which raise funds are either for the purpose of their own development, that is working capital requirement, which could be in the form of issuance of shares, debentures, any other security, or they will obtain it in the form of loans from banks, financial institutions, or by way of issue of debentures, or in the form of deposits. So deposit in general parlance is money received from public. Companies Act ensures higher accountability on these companies which are accepting deposits, primarily to protect the interest of depositors and also to prevent malpractices by companies. With this brief overview, let's get into important definitions as per the Act and CAD. CAD is Companies Acceptance of Deposit Rules in short form. What is an eligible company? An eligible company means a public company which satisfies the following conditions. Option A, having net worth of 100 crores or more, or B, which has a turnover of 500 crores or more, and such company has passed a special resolution and has filed form MGT 14, which is the prescribed form under section 117 subsection 3, before making such invitation to public for accepting the deposits. An ordinary resolution will suffice the requirement provided such companies accepting deposits within the borrowing level prescribed under section 180 subsection 1 clause C. So 181C prescribes where the existing including borrowing is less than the aggregate of paid up capital, free reserves and securities premium account of the company, then ordinary resolution is sufficient in this case of accepting deposits. So this eligible company we will see in the future slides as to how these eligible companies can accept deposits from public. So please remember friends, deposit from members and deposit from public, how it happens and how eligible companies are provided the option of accepting deposits from public we will be seeing in detail. Depositor. Who is a depositor? Any member who has made a deposit with the company in accordance with the provisions of section 73 subsection 2 of the Companies Act, or any person who has made a deposit with a public company in accordance with the provisions of 76. So these two are considered as depositors according to rule 2(1)(d) of CAD rules. Who is a relative? We will be seeing relatives prescribed under deposit exemption under rule 2(1)(c) of CAD rules. So who is a relative? Relative will be again according to your 2 subsections 76 of Companies Act, who is related to one another by way of members of HUF, spouse, father, mother, son, daughter, spouse of son, daughter, brother, sister, including stepfather, stepmother, stepson, stepbrother, stepsister. So I'm not getting into detail of the definition of relative. It is your section 2 subsection 76. Now let's see what means and includes in the form of deposit and what it does not include. Does not include is a big list. So deposit includes any receipt of money by way of a loan or deposit. However, it does not include the following. Any amount received from central government, state government or any statutory authority or local authority or from any other source which is guaranteed by again central government or state government, and any amount received from foreign government, foreign banks, foreign institutions, multilateral financial institutions like IFC, ADB, foreign body corporates, foreign citizens, person resident outside India subject to the provisions of FEMA. Any amount received as a loan or facility from any banking company or from SBI or any of its subsidiary companies or such banks as provided under Banking Regulation Act or your Banking Acquisition and Control of Undertaking Act, which are corresponding new banks as per their definition. Any amount received as a loan or financial loan or financial assistance from public financial institutions notified by central government in consultation with RBI. And any amount received against issue of commercial papers in accordance with RBI guidelines, any amount received by a company from another company. So please remember friends, intercorporate deposits, ICDs, are outside the purview of deposits. Then, this is another important interesting provision generally asked by a lot of professionals. So any amount which is received. So what if I receive an application money and I am not alerting shares within 60 days? Will it be considered as deposit? Yes. Under this provision, if you are going to receive any amount pursuant to an offer and towards subscription of securities, securities will again be your 2 subsection H of Securities Contract Regulation Act definition, which includes equity shares, bonds, debentures, all. However, if securities are not allotted within 60 days and refund is not made within 15 days, then such amount will be treated as deposit. Please remember friends, prior to this Companies Act 2013 in 1956, you never had this provision of 60 days. Now, if allotment is not happening within 60 days and if you are going to show the amount as share application money pending allotment in your financial statements, you shall make an allotment within 60 days or refund the amount. Otherwise, it will fall within the purview of deposits. So now let's understand what will be the rule of the companies which accepted such application money prior to this Companies Act 2013. For such companies also, there is a provision under Rule 21C of CAT which says that if such application money pending allotment is shown in your financial statements as on 31st March 2014 and such allotment has not happened as on 31st March 2015, then you shall make the allotment or refund or comply with these provisions. So that is the ultimate timeline given by the statutory authorities. Any amount received from the director. So this again is an interesting clause which many of the companies accept under the purview of exemption, particulars of transactions which are not construed as deposit. So when you are accepting money from a director, and in case of a private company, it includes relative of a director as well. There are 2 conditions subject to which it will not be considered as deposit. One, get a declaration from your director stating that it is out of his own funds and not out of borrowed funds, and also make such disclosure in your board's report. If these 2 are complied with, then it will fall outside your purview of deposit, which means if your director is providing money and you are getting it under the CAD rules 21C, but in between he ceases to be a director, the provision does not provide for immediate refund of money. It is silent about the same, in which case the continuation of the exemption is still there. And then we have issue of bonds or debentures. There are 2 conditions. One is you should have secured debentures or it shall be CCDs, which shall be converted into shares within 10 years. Previously it was 5 years. By virtue of amendment, you now have it as 10 years. Then this unsecured non-convertible debenture can be falling outside the purview of deposit provided it is listed in a recognized stock exchange. Then we have non-interest bearing security deposit received from employee, any non-interest bearing amount received and held in trust. All these are outside the purview of deposits. Any amount which is received in the course of and for the purpose of business of company, So you have 7 such clauses under this ambit where the money, such advance is received for supply of goods or provision of services, and it is appropriated within a period of 365 days. So that is the condition prescribed there. Number 2 is it shall be in consideration for an immobile property. 3, it shall be for performance of a contract for supply of goods or provision of services. 4, it shall be under long-term project for supply of capital goods other than what is covered under B, which is your consideration towards immobile property. 5, in the form of warranty or maintenance contract for future services being rendered. 6, it shall be by any sectoral regulator or as per central government or state government directions. 7, it shall be for subscription towards publication. Friends, please remember the last 3 are new additions pursuant to an amendment. If the amount received under A, B or D becomes refundable due to lack of necessary permission or approval to deal in the concerned goods or services, then such amount received shall be deemed as deposit on the expiry of 15 days from the day they become due for refund. These are additional exemptions available. Unsecured loan brought in by promoters, like your directors, if you receive money from your promoters, it is well outside the purview of deposits, subject to these conditions. So professionals, please remember, if you are not complying with these conditions, it will be considered as deposit. 1, the loan is brought only in pursuance of a stipulation prescribed by your bank or financial institution, and loan is provided by promoters themselves or by their relatives or both. Then the exemption will be available only till the loans are subsisting. So if the loans are closed, then automatically it will fall within the purview of deposit. And any amount accepted by a Nidhi company, chit company, collective investment scheme in compliance with SEBI regulation, there is a recent introduction for 25 lakh rupees for a startup company, more to promote the new private companies which are startups under the provisions of Companies Act 2013 registered or under 1956 Act, but the issue shall be by way of a convertible note in a single tranche from a person for an amount of 25 lakhs or more. So this is the condition prescribed. They've also introduced additional benefit for AIFs, VCs, venture capital funds, infrastructure investment trust, real estate investment trust, and mutual funds registered with SEBI. So these are the exemptions or transactions which are not considered as deposit. So now let's move to the charging section, the prohibition on accepting deposits under section 73 of the Act. Chapter 5 deals with these provisions. Deposits under the Companies Act are categorized into 2, either deposit from members or from public. No company other than eligible companies are those companies which we saw in the first slide, shall accept or renew deposits from public. Companies shall, however, accept deposits from members, provided you comply with the conditions prescribed under CAD rules, which we'll be seeing in the next slide. However, certain exemptions from fulfilling the terms and conditions are available to private companies and specified IFSC public companies. So IFSC public companies are your International Financial Service Center public companies, again registered under your SEBI, RBI, IRDA, and set up. Such international financial service centers are set up in a multi special economic zone set up under SEZ Act rules. The provisions of this section are not applicable to a banking company, NBFC registered with RBI, and such other company as may be notified by central government. So please remember, friends, Rule 1.3 of CAD rules clearly exempts 3 companies: banking companies, NBFCs, NHBs, or such other company as notified by central government from the applicability of these provisions. So what are the conditions for accepting the deposits? 1, approval from members by passing a resolution in a general meeting. 2, you shall comply with the terms and conditions as specified in Rule 3 of CAD rules. 3, conditions specified in section 732 of the Act. Now let's see the terms and conditions prescribed under Rule 3. So deposits shall not be accepted if they are repayable on demand, or the tenure shall not be less than 6 months or more than 36 months, which shall be accepted or renewed. And there is an exception to this. A company may accept deposits for a period earlier than 6 months, provided 2 conditions are satisfied. 1, such deposits shall not exceed 10% of the paid up capital, free reserve and securities premium account of the company, and they shall not be repayable within 3 months from the date of such deposits or renewal. If depositors desire, deposits may be accepted in joint names, however not exceeding 3. Interest rate on deposits shall not exceed the maximum rate prescribed by RBI for deposits accepted by NBFCs. If you read NBFC deposits accepting directions prescribed by RBI, it is 12.5%. Only persons authorized in writing by companies to solicit deposits shall be entitled to brokerage. Again, brokerage, the cap is 2% for brokerage commission and expenditure provided necessary bills are submitted to the company, and 2.5% again it is only for those brokers who are soliciting deposits and not to other people. For companies shall not alter the terms and conditions of deposits and related agreements after the circular is being issued. Circular is your advertisement for inviting the deposits. Now, let's see what is the cap prescribed for deposits accepting or inviting deposits or renewal. Deposit from members for existing, including your proposed deposits on the date of acceptance should be less than or equal to 10% of your paid up capital, free reserves and securities premium account. For any other deposit, the existing plus proposed deposit should be less than or equal to 25% of your paid up capital, free reserves and securities premium account. This is for eligible companies, professionals. For eligible company being a government company, it is 35%. So acceptance shall also include renewal of deposits. Now let's see the limit on deposits for companies other than eligible companies. For them, it is not deposit from public, it is deposit from members. So that is the significant difference. For eligible company, you are entitled to accept deposits both from members and from public. But for companies other than eligible companies, where we saw the threshold, no turnover of 100, 500, 300 crores, sorry. So that eligible company definition, if you fall within that ambit, then the existing plus proposed deposit should be that 35% both from public members. In all other cases, it will be only from members. An exception to the above limit is prescribed for again private companies, unspecified IFSC public companies. 100% of your paid up capital, free reserves and securities premium account is allowed. Further, details of such deposits shall be filed in your form DPT3. And private company being a startup company, again the limit shall not, such 100% limit shall not apply for a period of 5 years from the date of incorporation. And they shall satisfy all the 3 conditions as prescribed. 1. They shall not be an associate company or subsidiary of any other company. And the borrowing from banks or financial institutions shall be less than twice of your paid up capital or 50 crores, whichever is less, or they shall not have defaulted in repaying such borrowings at the time of accepting deposits. Details shall be filed in your DPT3. So there are specific conditions prescribed for eligible company. Since they are going to accept from public, more stringent norms are provided. One is credit rating shall be obtained at least once in a year. Such credit rating shall be from approved credit rating agencies as specified by RBI, which is Fitch, CRISIL, ICRA, CARE, Brickwork. All those are as prescribed by RBI. Credit rating shall not be below the minimum investment grade rating or other specified credit rating for fixed deposits, and such copy of the credit rating shall be filed in your DPT3. What are the other conditions under 73.2? One is issuance of circular. So circular is nothing but your advertisement. So advertisement shall be issued containing your financial position, credit rating details, the total number of depositors, amount due from each deposit. And such circular shall be filed with ROC within 30 days from that before the date of issuance of circular, which is prescribed in form DPT1. Deposit repayment reserve account shall be maintained with any scheduled bank with 20% of your total deposits maturing during the year. Professionals, please remember, previously this was 15%, now it is 20%. And auditor certificate stating that you have not defaulted in repayment of deposits or default has been rectified and the period of 5 years has elapsed shall also be provided. Provided security on deposits due or interest including creation of charge on property or assets of the company. So you shall provide secure deposit. If you are not going to provide secure deposit, you shall say, mention in your circular that these are unsecured deposits. So what are the exceptions to section 73.2? Again, there is an exception given to private and specified IFSC public companies to accept from members which is less than or equal to 100% of your paid up capital, free reserves and securities premium account, and being a startup for a period of 5 years from the date of incorporation. Private company which satisfies all the conditions like we saw in the earlier slide. No, the similar conditions are prescribed. One, they shall not be an associate or subsidiary of any other company, or the borrowing shall be less than twice of your paid up capital or 50 crores, whichever is lower, and there shall not be any default and repayment of such borrowings. So what we will just see the brief particulars to be forming part of your advertisement or circular in Form DPT-1. Eligible companies shall issue the circular in DPT-1. It shall be advertised in English and vernacular language newspaper, and it shall be placed on the website. Companies other than eligible company, if you see, or the similar conditions are prescribed. The only difference being advertisement in English and vernacular newspaper, it is for eligible company, it is mandatory. For companies other than eligible companies, it is recommendatory in nature. All other conditions are the same. What are the other general points? So the circular shall be issued on the authority of the board only, and it shall be filed with the registrar at least 30 days before the date of issuance of the circular. And every year there shall be a fresh circular issue, and a circular shall be valid until the expiry of 6 months from the date of closure of the financial year. You shall appoint trustee for the purpose of your securing the interest of your depositors. So who shall be appointed as trustee? Again, the qualification is prescribed, and no company shall issue a circular unless the company has appointed one or more trustees. Who shall be appointed as trustee? If you see, director, KMP, or employee of the company, or associate or subsidiary or holding company, or person who has material pecuniary relationship with the company shall not be appointed as trustee. A written consent shall be obtained from this trustee, and a deposit trust deed shall be executed, which shall be informed DPT-2 at least 7 days before issuing the circular. And deposit trustees cannot be removed without the unanimous consent of all the directors, with at least one independent director where there is one. Now let's see what are the other conditions. So deposits accepted by the company shall be repaid with interest in accordance with the terms and conditions as committed by you in your deposit trust deed, in your circulars or advertisement issued, in case and in accordance with the provisions of this act and rules. If there is any default, depositor may apply to tribunal to repay the amount due plus loss or damage occurred because of such non-payment or such other order as the tribunal may deem fit. And this DRR account, deposit repayment reserve account, shall be used only for the purpose of repayment of deposit and not for anything else. Now, section 73, we saw the primary conditions for eligible company and other companies. For repayment of deposit accepted before the commencement of the Act, section 74 says that you shall file DPT-4 within 3 months from the date of commencement of this Act, and you shall also repay within 3 years from the date of this commencement of the Act, or before the expiry of the due date, whichever is earlier, the amount which remains unpaid or which becomes due on the date of the commencement of the Act. However, the tribunal may allow extension of time if the company's financial position does not allow them to repay within the timeline prescribed, and there is a contravention for contravention of the provisions of this 74 section. Subsection 3 prescribes that company shall pay a fine of ranging from 1 crore to 10 crores, and for officers in default, the fine is 25 lakhs to 2 crores, and with imprisonment up to 7 years. So stringent penalty and punishments are imposed. Damages for fraud without prejudice to the provisions under 74(3), where your contravention of the provisions, the violation rule is prescribed, and 447 is your where you have this fraud. What is the penalty provided? Over and above that, it is provided that the deposits, if they are accepted with an intention to deceive the depositor, then every officer is personally liable for such loss that may have been incurred by the depositors. Further to this, any suit proceeding may also be taken by the depositors who are affected by this. So deposits from public, section 76 clearly says the 73(2) general conditions will apply for all the eligible companies which are accepting deposit from public, and such companies shall obtain credit rating from recognized credit agencies, which we saw in the previous slides, and such companies shall also create a charge on the asset. So there is no option for unsecured deposit. They shall create a charge on the assets within 30 days from the date of acceptance of deposit. So how do you create charge on your assets? So all secured deposits you shall create on the assets as specified in Schedule 3, all the assets excluding your intangible assets. and such security shall be either on specific movable property or specific immobile. So it cannot be like a floating charge. It shall be a fixed charge either on your movable or immobile property. However, the deposit amount shall not exceed the market value of the assets on which the charge was created, and that shall be assessed by a registered valuer. And the punishment for contravention is similar to your 74(3) provisions. So company, it will be 1 crore to 10 crore, officer in default 25 lakhs to 10 crore, and imprisonment up to 7 years. The only addition being that if it is proved that the officer has willfully contravened the provisions, he or she shall be liable under section 447. So for contravention of this provision, the additional clauses are: 1, either you violate the manner or condition prescribed under 73 or 76 sections, which prescribes the specific conditions for acceptance of deposit, or if you fail to repay the deposit within the time prescribed, or such other further time as may be allowed by the tribunal. In all the cases, the punishment for contravention will get attracted. So what are the other general provisions under CAD rules? We will just see in a broad manner. One is, you shall maintain register for deposits, and the register of deposits shall contain all the particulars like your name, PAN of the depositor, nominee details, guardian details, the date of payment of deposits, when is the due date likely to occur, payment of interest, what is the mandate and instruction given by the depositor for payment of interest. So such other clauses will be there in your register, and you shall make an entry in the register within 7 days from the date of issuance of such notice, and it shall be preserved in good order for a period of 8 years, and it shall be authenticated by the company secretary or director authorized by the board for this purpose. And there is a penal clause provided also for rate of interest, where if you are not repaying the money within the due date prescribed, then 18% for the overdue period in case of deposit, the company shall be liable to pay. And every private company, there is another rule for disclosure in your financial statements. So where you are going to accept money from your directors or relative of director, private company shall carry such statement in your notes to financials, and all other companies, they shall carry such notes in the financial statements for every money that is accepted from directors. Likewise, you have to file a return of deposit. So annual return is form DPT3 shall be filed on or before 30th June of every year, with the particulars as on 31st March of that year. And the rule 16 prescribes that. And rule 16A was recently introduced for one-time return to be filed by all other companies which are not falling within the ambit of deposit. However, these companies are taking shelter under rule 2(1)(c), granting exemption from the purview of deposit. So such companies shall file one-time return, and the due date prescribed was within 90 days from 31st March 2019, which is 29 June 2019. And the DPT3 shall also carry the outstanding borrowings as on 31st March 2019. So professionals, please remember, if there was no outstanding borrowing as on 31st March, there is no need to file form DPT3 for one-time return. So this income tax implication for acceptance or repayment of deposits, we will see. Loans or deposits shall not be taken or accepted from any person in cash for an amount of 20,000 or more. Exception is prescribed for government, banking company, post office, savings bank, cooperative banks, etc. Likewise, 269T prescribes that amount shall not be repaid in the form of deposit, where it is in the form of cash for an amount of 20,000 or more. Again, the same exemption is prescribed. And in case of contravention of these provisions, 269 SS or T, penalty is levied to the tune of the loan amount specified. And if there is also a saving clause, if there is a reasonable cause for accepting or repaying such loan in which the assessee can prove, then the penalty will not be levied in such cases. Friends, any questions? Please feel free to ask for any clarification or queries that you may have in this topic. So we'll just see one interesting case law before we wind up this session. Bimla Kothari versus Unitech Limited. So here, deposit would, they have mentioned that every deposit would mean and include all previous deposits accepted by the company. So the question or the fact involved in this case was where the deposit was accepted before the commencement of this act, whether this provision will still get attracted, because the petitioners were of the view that the recovery of deposits made prior to 1st April 2014 also will get covered under section 73, and hence they sought the remedy from the relevant authorities, and the respondents however claim that this case will fall outside the purview because NCLT has no role to play. However, the essence of this provision of the case was whether it is before the commencement or after the commencement, the depositors amount shall be repaid, and section 73 read with the relevant provisions of CAD rules also well covers the deposits which were accepted before the commencement of this act. Hence, petition filed by the depositors for recovery on failure of the company to repay would be maintained and allowed, and legislature does not differentiate between depositors prior to or after 1st April 2014. Thank you very much, friends.